Hello traders, and today we're going to be talking about the SMA, or the Simple Moving Average. As the name states, it is probably the easiest moving average that you will use in your trading, and the easiest average by far to go ahead and calculate by hand and to get the values yourself as opposed to having the computer calculate them out. Out of the 5 different moving averages, SMA, EMA, or exponential moving average, which we've done a video on before, and I'll put at the end of this if you'd like to get some information on the EMA, SSMA, or the smooth simple moving average, HMA, or whole moving average, and WMA, or weighted moving average. The SMA is the most common of these all, and it's used in a lot of different indicator calculations, such as the Bollinger Bands, which we've also done a video on and talked about how that simple moving average takes standard deviations into effect to give you trading data as well. Now let's take a quick look at how the SMA is calculated. First thing you want to do is decide what period you're using for your calculation. Most platforms, Alveo being no different, uses a 10 period as the default. This means that you'll be calculating 10 candles back and getting the average based off of that. Depending on what strategy you're using, if you're using a moving average crossover or an SMA just to get a longer term feel for where the market has been and may be going, you'll probably want to bump up that number just a little bit, and you may also have a smaller period as well, especially if you're doing that crossover depending on what time frame you're trading. The second thing you want to do is figure out what price type you want to calculate off of. Most platforms, once again Alveo not being an exception, uses the price close based off of the SMA, which takes that close price or the final price of the candle and uses that in its calculation. Now that we've decided what our period is and what our price type is, to go ahead and calculate, we'll just take the previous period amount of candles, add up the value at that specific price point, divide by the period, and we have our SMA value for that specific candle. Now that we've calculated our SMA and we know how Alveo or our other trading platform is calculating our specific SMA, we can go ahead and talk about our entries. The first entry and the most common entry if we're using just strictly an SMA-based strategy is the SMA Crossover. The SMA Crossover is composed of 2 different moving averages, a short period or our fast moving average, and a longer period or our slow moving average. To figure out the numbers that we'll use for these different types of SMAs, we'll want to look at the chart, put the SMAs on one by one, and just see how they cooperate with the chart. The easiest way to do this is to start by putting on your fast moving average or that slower period moving average, and you want it to follow the curve of the chart pretty well. With the exception of a few of those price hikes and everything like that, you want the overarching feel of the chart to be the feel of that SMA. Next, we'll go ahead and we'll add on our longer period SMA or our slow SMA. This one will be a little bit more guesswork with that period. But what we'll want to look for is we'll want to look for those substantial decreases or increases in the chart and have it so that that longer period SMA overlaps with our short period SMA at approximately the same time as we see those decreases and increases. Once we have that set, we've already done our historical analysis on our periods because that's how we chose which SMAs to add. And so now in the future, what we'll be looking for our entries is when we have our fast moving average or that smaller period crossing above our slow moving average or that longer period moving average, that'll be our buy indication. Adversely, as that fast moving average crosses below the slow moving average, that will give us our sell entry for our simple moving average crossover. Our second entry for the SMA will be based off of just one moving average and our price action. The reason this entry works is, by definition, with any type of moving average, in theory, we're going to stay below the moving average for the period and above the moving average for the period. So if we're using a 10 period, we're going to have approximately 5 periods of downward movement away from the SMA, 5 periods of movement towards the SMA as we intersect, and we'll keep oscillating above and below the moving average in that set of 10 periods. That really ties in this second entry based off of that price action intersecting with the moving average. As we cross above the moving average, we can go ahead into our buy trade and we'll be watching as we start to go up and waiting for about half of the period before we sort of get ready to close out the trade and just make sure that it's continuing in that bullish direction. The thing with the simple moving average and with trading in general is it doesn't follow a set rule book. It changes a lot, and so just because we crossed above that moving average doesn't mean we're only going to be above it for 10 periods. We can be above that moving average for 20, 30 periods, even though it's a 10 period moving average. And so we'll want to watch these trades very closely as they're not as reliable as the SMA crossovers. So now that we've entered our trade, when do we exit? If we entered our trade off of the SMA crossover, what we'll really be looking for is once that fast period moving average, or the one with the shorter period, starts to curve down towards our longer period moving average or our slow moving average. The reason for this is when we set up our original moving average values, we made it so that that SMA closely follows the curve of the chart. And so as we start to see that moving average go down, price action has already gone down a little bit, and it's enough to make that moving average decrease as well. Once those two moving averages start going together like they're going to intersect, we're going to want to go ahead and exit out of our trade and get ready to enter the trade on the opposite side. Now, if we didn't use the SMA crossover for our entries, and as opposed we use just our price action intersecting with our moving average, we're really going to focus on one, that period. Since the idea and the concept behind the moving averages is that every period we're going to intersect with that moving average again. Once we're about halfway to 66% of the way through that trade, we're going to want to see if that price action is starting to head down towards that moving average to intersect. If it is, we're going to want to go ahead and close out. That's our time-based entry. Once again though, the time-based entry and exit isn't always the most reliable. So what we're really going to want to look for is just our standard price action indications that we're going to have reversals in the price, such as a shooting star or a hammer, depending on which way we entered the trade. So now if we didn't use our SMA crossover entry and instead we use just our price action crossing over our simple moving average, we'll really be looking for two different things as we're looking through our exits. The first one is just going to be our time-based exit. Since we're using a 10 period SMA or whatever period we're looking at, about halfway through that period, the price action should start to slow and curve down the moving average by definition. Once again, with trading, this isn't always the case. So that's when we'll really start looking for the exit, but not for sure exiting. The second thing that we'll be looking for, and this will be the primary reason which we will exit, is we're just looking for price action reversal points. Since our entry was based off of price action with the moving average, our exit will be based off of the same. So once we see that price start to reverse and head towards that moving average, we're going to want to go ahead and exit out to maximize our profits and then get ready to go ahead and enter the trade on the other side. Now that we've calculated our simple moving averages, let's go ahead and look at our entry points. The primary and most common entry for a simple moving average trend is going to be the simple moving average crossover. This technique is based off of two simple moving averages, one that's a shorter period, also known as the fast moving average, and one that's a longer period, also known as the slow moving average. What we're going to be looking for our entries is when we have one of our moving averages, the fast moving average, cross above or below that slow moving average. Once it crosses above, we'll enter the trade depending on the direction it crossed. So if the simple moving average crosses above that slow moving average, we'll go ahead and enter that buy. And if it crosses below the slow moving average, we'll go ahead and enter the sell trade. The second entry for our simple moving average is going to be based off of one moving average and also based off of the mathematical concept that whatever period we're using, the moving average will intersect with the price. And so if we're using 10 periods, we'll spend about 5 to 6 periods heading up or down away from the moving average, and the remaining 4 to 5 periods will be heading back towards the moving average, at which point we will intersect with that average. Now, this is a very theoretical approach, especially when it comes to trading where there are no absolutes. And so our primary entry for this is going to be, once we cross above that moving average, we'll go ahead and enter the buy, and we'll have about half of our period of time to be in that buy. Or once the price action crosses below the simple moving average, we'll go ahead and enter the sell. Once again, we'll have approximately half of the period to stay in that sell in theory. And so now that we've entered our trades, where do we exit? If we entered our trades based off of a simple moving average crossover, what we'll want to be looking for is once that moving average or the fast moving average starts to curve down towards that slow moving average, or curve up depending on if we're in that buy or the sell, we'll want to go ahead and get ready to exit the trade. The reason for this is since when we were choosing the periods for our simple moving average, we set our fast moving average as one that follows the curve of the market pretty well. And so if the market is going down enough for the simple moving average to follow it down, it's letting us know the odds are we're likely in a reversal of the market, and we're going to want to go ahead and close out of our buy or our sell to maximize our profits at that point. Now, if opposed to the SMA crossover, we entered with a price action SMA crossover, we're going to have really sort of two exits that we'll focus on. The first one will be the time-based exit, or about half to 66% of our time frame will be when we'll want to start looking to see if we're about to reverse back towards the moving average. Once again, in trading, there are no absolutes. So just because we've been 6 candles into a 10 candle SMA doesn't necessarily mean that we're going back down towards that SMA. So this is really when we should check up on our trade. What we'll really mainly be focused on for exits is our price action. Since we used price action to enter the trade, that's going to be our best bet when it comes to exiting the trade. And so if we have any reversal candles or any candles that start to go and merge with that simple moving average, it's about time to close out of that trade, book our profits, and get ready to enter the trade on the opposite side. If you'd like to add on the simple moving average or any other indicator to your chart, if you're using Alveo, which is Apiary Fund's proprietary trading platform, you'll go to the top right of the chart you want to add it to, find the indicator icon, which looks like 2 line charts overlapping each other, scroll down to the S's, find SMA, confirm your period and price type, click OK, and you have at least one of your moving averages on the chart depending on which strategy you want to use. If you're using the crossover, you'll do the same steps to add the second one. If you're using any other trading platform, however, that's not Alveo, you'll just go to wherever you would go to add indicators onto your chart and follow the same steps. Change your period, change your price type, confirm, and begin trading. Or if you're using a second moving average, follow those same steps again to add those on and then begin your trading. This simple moving average trading tip was brought to you by My Trading Signals, where you'll not only receive daily signals in your inbox, but also be able to partake in classes with Signals creators to be able to identify your own trade setups in your day-to-day trading. Click in the link in the description below to get your free 30-day trial to My Trading Signals, as well as partake in a free 90-day money-back guarantee. Thank you for watching these trading tips. If you like these videos, let us know by liking and subscribing to the video below. This lets us know that you find these videos useful and lets us continue to put these videos out every Tuesday to help you improve your trading with both indicators and strategies. Also, let us know in the comments what indicators or strategies you'd like to see up next on these trading tips, and that way we'll be able to give you guys what you want in your trading. Thank you all for watching and happy trading.